Hello everyone, my name is Danny Prestige. I'm a certified financial planner and I'm a financial advisor here at Wood Financial Group. I'm here today with the March 2017 monthly update. Now February 2017 was a month filled with record highs in the domestic stock markets. The S&P 500 and the NASDAQ both hit a number of new highs last month, while the Dow actually hit a record high every trading day between February 9th and February 27th. The last time we experienced a string of records like that was in 1987, and this is only the second time it's happened in the past 120 years. So seeing stocks rise like this can be very exciting, but I do want to caution everybody not to get too caught up in that excitement. Now, just as emotion has no place in investing when the markets are volatile and challenging, the same rule applies when markets are growing quickly. So let's look into some of the fundamental data we learned in February so we can better understand where the economy actually stands. Now on the labor front, February gave us a little bit of mixed data. The January jobs report showed that the economy added way more jobs than was predicted and continued its 76th straight month of growth. Now on the other hand, hourly earnings and the labor force participation each increased, but only by a small margin. Unemployment was also up slightly as more people re-entered the workforce. Now ultimately, job data released in February shows that the labor market is growing, but the pace is still not quite what many people would expect and like. So we're looking anxiously towards the February jobs numbers, which are creating a lot of buzz at the moment. Now another area of modest growth was the revised gross domestic product numbers for the fourth quarter of 2016. Now each quarter, the Bureau of Economic Analysis calculates the U.S. gross domestic product, which is the total dollar value of everything that people and businesses produce during that period. This measurement is a critical indicator of our economy, its growth, and its health. So investors and financial analysts watch its changes very closely. And because the Bureau receives updated data after the end of the quarter, they release 3 different GDP numbers over the course of 3 months. They have the advance, the preliminary, and the final report. Now in February we received the second, or the preliminary reading of GDP for the fourth quarter of 2016. Now most people expected that number to increase and be upward raised to 2.1% from 1.9%. But in reality, the reading didn't change and stayed at 1.9%. Now for comparison, the Q3 GDP came in at 3.5% growth. So rather than indicating a slowing of the entire economy, however, just one aspect of our GDP contributed to the majority of the decreased growth: lower net exports at the end of 2016. Now trade is integral to our economy, and maintaining a healthy trade balance is a key. So as for our political environment and its evolving, changes to trade deals could continue to affect the balance and as a result, our GDP and our stock market. So for now, no one can say what new policies may be on the horizon or if the markets will continue to gain as they have the last couple months. So we're going to continue to analyze the data, search for the most thorough view of our economic standing, and keep you posted to the best of our ability. So that wraps it up for this month's monthly update. Thank you very much for your attention. If you do have any questions about your particular investments or what's going on in the investment markets, feel free to give me a call, 615-826-5749, and thank you for watching the Wood Financial Group monthly update.